Tesla shares right now are trading higher. They're up almost a little bit over 9%. Want to talk about this with the panel. And let me start with Julia LaRoche. Why would Tesla, I get it. You get a stock split. The stock was on a tear over $2,000 a share. Why would it be up so dramatically today? Julia, have I got you there?
Hey there, Adam. I actually can't give you a definitive answer as to why, other than when you have a split, you just have a lower entry point for more investors. But I honestly just can't tell you why.
I think to jump on Julia's point here, when it comes to Tesla and Apple, it is interesting that both these large tech companies at the same time announced that they would be doing a stock split. I think what's interesting is that in this time and age, and we talked about this with Ryan just now, fractional trading really kind of reduces the need for this type of financial engineering, if you will, right? A lot of people on Robinhood or on even other types of platforms like TD Ameritrade, Schwab or whatever, they can get access to shares even if a Berkshire Hathaway, for example, is at a multi-thousand point level. You can just buy a certain fractional shares, leave it up to the brokerage to figure that out. I think this is really more about messaging. When a company divides its stock up, it's signaling to its investors that we could see this stock going back up in price again. That's why it's usually a trend that stocks that split tend to be multiple types of actions. That Apple, for example, splitting their stock today, this is far from the first time that they've done it. I believe this is the 5th time that they've done it in their company history. So something to be mindful of as we start to see these other types of large companies see their stock prices rise pretty quickly as well.
So let's bring into this discussion Craig Irwin from Roth Capital. He's an analyst at Roth Capital in New Jersey. And I just want to make sure that you unmute there, Craig, so that we can hear what you have to say, because a lot of people love Tesla. Why?
Oh, Tesla's just done an amazing job over the last several years, essentially single-handedly creating the category of EVs as a viable commercial product. And there's a real halo around the company and its aggressive adoption of technology. So they are the leaders. They are aggressive and moving much faster than the rest of the automotive industry, and literally years ahead of their next closest competitors.
Hey, Craig, it's Brian Cheung here. So a lot of people are looking at these two types of companies that announced their stock splits, Apple and Tesla. Another type of name that you might want to loop in there is Amazon as well, but their stock price around $3,500. Why isn't a company like Amazon going to follow suit? Would you expect companies like that to follow suit? What does that say, I guess, institutionally about the way that maybe their financial teams are approaching the stock prices when they watch their day-to-day changes?
Yeah, Elon is very, very market savvy. And I think the fact that he's one of the early movers and others are following is just something that underscores that he's on the bleeding edge, right? And Tesla's got ambition. He has a pay package that's tied to multiple milestones over the next several years, and I'm quite sure he expects to pull that entire pay package down. So we're just getting pieces of his business strategy to achieve that. And I think there's many more things to come from Tesla over the next several years.
Craig, it's interesting you just brought up that they're years ahead of competitors, yet we continue to see more and more new entrants to the space. Walk us through that, and how long do you think that competitive edge lasts? What is your more long-term thesis here for Tesla?
So I'm actually long-term bearish for Tesla, right? So I think, there's more than 400 EVs that are going to be on the road by the end of 2025. Many of those are redos for tier 1 OEMs that have done something and not really executed as well as expected. Porsche has a beautiful car with the Taycan, but the performance is just not there. Let's be honest. Many of those cars I expect to be successful. Some of those are from well-established brands or marques like Porsche or BMW or Audi, but many are from other companies that we're seeing fund quite successfully in this market. Names like Canoo and Fisker and Nikola that are not yet household names for a lot of America.
Well, Fisker's been around for a while, but they've had, a lot of starts and stops. But let's get back with Tesla, it's more than just the car, though, right? There's the news about their software update with the autopilot system to detect speed limit signs, and also, those traffic cameras that some of us got speeding tickets a couple years ago. Don't want to admit to that too much. But there's more to Tesla than just the car. There's also just the battery technology. Would they ever sell that to other manufacturers?
So I know multiple people that have tried, including people with business relationships with some of the people on the board of directors or still on the board of directors. Even their own companies have been unsuccessful in procuring batteries from Tesla over the last many years. Tesla's using essentially everything that it can produce. I think the battery future is interesting. I don't think they have anything unique that Panasonic or LG or Li Shen doesn't have. I think, where they are differentiated and where investors are probably much more excited is around autonomous. So people spend what, $7,000 plus per FSD in a Model 3 today. There's expectations, Elon tosses out a $100,000 value in the future. That's aggressive, but if people believe, then they end up being wildly bullish on the stock. And I think that's a large part of the institutional participation over the last 6 months.
And Craig, I know that this seems like a million years ago, but if we rewind to the end of last year, it seemed like the biggest story for Tesla from a bear or bullish case was really what their numbers were going to look like in China. As the Chinese economy kind of gets restarted after all of this, I'm wondering, what have you seen on that front that provides either headwinds or tailwinds to their business model over the future?
So China is actually executing very, very well. It looks like the Model 3 will have a proportionately larger opportunity in China than the S and the X. So that will end up being a very important market for them. But one of the things that I pointed out to investors a few months back is India's next. There are plans for a facility in India that are being developed right now. They're in the process of choosing a site for the facility. India, I expect to be announced before the end of the year. That's a market that could be just as big as China and just as exciting as China. And this is one of the things investors are looking for.
All right, Craig Irwin, Roth Capital Analyst, all of that, and still bearish, though, on Tesla long term. We're going to bring you back at some point on that one. Thank you very much.